Hey everyone, in this video we're going to look at AT&T's growth in its most recent quarter, which was surprising to me given that it operates in a relatively stagnant industry. Think about it, wireless and home internet. Pretty much everybody that wants wireless phone connection has one, home internet as well. So how is AT&T generating growth in an industry that's so mature already? So that's interesting to me. So let's look at its most recent results. The company added 326,000 postpaid net phone additions. So impressive, but more so impressive because it raised prices it actually raised prices. So it didn't gain customers because it offered more promotions or lower prices. It organically gained customers because it offered better service and demonstrated that it is better than some of the other choices available to consumers. So mobility postpaid phone average revenue per user of $55.63 was also up 1.5% year over year. So the average customer at AT&T pays $55.63. That's a lot. A higher ARPU on legacy plans from last year's pricing action. So they raised prices last year, and that's leading to higher average revenue per user because remember, very few people canceled their subscription, and we'll look at that also here. A continued mix shift to higher value rate plans with higher margins. So people are choosing the higher data plans with, of course, higher profit margins and consume improvements in consumer international roaming trends. People are traveling more. When they travel, they need that roaming connection, and that's more profitable for AT&T. And just as an A side here, here's another point of evidence that's highlighting how people are absolutely unleashing pent up demand for travel. I've been saying this in a lot of the travel stocks that I follow. People are just traveling a lot more, and there's a lot of room to go for that trend. So if that's helpful for AT&T, it's likely to continue boosting AT&T's results for the next couple of quarters because people are just absolutely wanting to travel. It's surprising how sticky that trend has been. So I mentioned we would talk about cancellations. Postpaid phone churn, which is cancellations, remains low at 0.79%. That means 0.79% of its customers are canceling. That's a retention rate of over 99%. And it's understandable because it's incredibly inconvenient to cancel or switch your phone company. It's incredibly inconvenient, and people are not likely to do that unless there is a compelling reason to get them to switch. Unless there's a very compelling reason to get them to switch, which AT&T hasn't been experiencing. And so that is, kind of explaining how the company is able to generate growth in this stagnant industry is that they're doing a really good job of keeping all of their past customers, and then they're incrementally adding new customers. Also, on the fiber side, they added 251,000 customers. That's strong growth in an industry that's, slowing due to significantly lower moving activity. People aren't moving as much lately. Remember, mortgage rates have skyrocketed, and people that have locked in the low mortgage rates in 2020 and 2021, they don't want to sell their homes to move because then they've got to get a new mortgage at 7.5, maybe even higher mortgage rates. So that's constrained moving activity. That's been a headwind for the industry. But even in that stagnant industry, AT&T managed to add 251,000 subscribers, fiber customers, I should say. And fiber ARPU was $66.70, which was up by 8%, as customers are increasingly choosing faster speed tiers. So people are working from home, learning from home, entertaining themselves from home, canceling cable television and switching to streaming, and it all requires faster internet speeds, and that's been a tailwind for AT&T as it benefits from consumers upgrading to faster internet tiers. So Interestingly, AT&T is managing to find some growth in this stagnant industry, but investors should not get used to this. AT&T is not going to all of a sudden become a company that grows revenue and earnings anywhere near double digits, but it's solid. It's good news that the company is finding growth wherever it can to operate more effectively, more efficiently in this stagnant industry. But that's it for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.